Hello all, welcome to Your Schemes. I'm Ilakya. I hope you are all doing well. Today we are going to see top 10 mutual funds in India. Before we do that, let's first understand how to select best mutual fund. What are all the factors to consider before selecting a mutual fund? This can be done in two steps. First, selecting the category, and the second would be selecting best scheme within that category. Let's talk about how to select a category. There are many categories in mutual funds. For example, equity funds, debt funds, hybrid funds, solution oriented schemes for retirement and children, other schemes such as index funds, ETFs, and funds of fund. You should select a category depending upon your investment goals, time horizon, and risk tolerance. Investment goals includes whether you want to have a retirement fund or for children's education, wedding, have an emergency fund, etc. If you want to have high returns, you can go for equity funds or aggressive hybrid funds. But keep in mind that these funds are of high risk. The second one, time horizon. You can set your objectives as per the time duration you want to stay invested for. For example, if you plan for long term, then your focus should be on growth oriented equity funds. Mid-term goals, you should have a balanced portfolio of growth and value funds that provide a good return and stability. If you want to plan short-term fund for college expenses, then you can invest in income funds to have a regular income. The third would be risk tolerance. You should evaluate whether you wish to play safe or take some risk, whether you have high risk tolerance or moderate risk appetite. Keep in mind that risk and returns are directly proportional. For high risk investors, best options would be equity funds, especially mid cap funds and small cap funds. For safe players, hybrid fund is the best option. Debt funds, on the other hand, offer further stability. Now, after selecting a category, that is equity or debt or hybrid or anything, how to select best scheme within this category? For that, you need to analyze the fund performance. Compare 3 to 5 performance against the benchmark. Check how consistent the fund has performed. Next would be net asset value, that is NAV. It refers to the market value per unit of mutual fund. Mutual funds with high NAV are expensive and offer lesser growth, whereas lower NAV costs less and gives more growth opportunities. The third on the list is AMC performance. Investors should check the performance of AMCs. Overall track record of AMC matters the most. Next, you need to check expense ratio. All funds come with some costs and fees, which can include managerial charges and operational charges. So, expense ratio can go up to 2%. Lower the expense ratio, higher the returns. Next factor that you need to consider would be exit load. Just like the expense ratio, some funds also have an exit load. If you make a premature exit from the fund, you must check if the scheme have any exit load or are they free from it. Next, you should also check AUM, asset under management of the AMCs. A larger AUM indicates a larger fund corpus. That means it involves more investors. A larger AUM for equity funds makes it tough for the fund to enter or exit the companies because it is favorable in case of liquid funds or other short-term debt funds. Most importantly, you should also check experience of the fund manager. It is advised that you check the qualification experience of the fund manager, what funds they have managed and how those funds have performed, etc. You should know if the fund managers could deliver the results outperforming the benchmark indices. Additionally, tax implication of all categories of funds depending on the long-term or short-term gains must be borne in mind before you arrive at a decision. Without further ado, let's check the top 10 mutual funds in India. This video is for information purpose only. Mutual funds are subject to market risk. The return shown in this list doesn't guarantee future returns. Please consult your financial advisor before investing. Let's start with HDFC Mid Cap Opportunities Fund. It is an equity fund and the 3-year return of this fund is 36.45% and the 5-year return is 18.04%. The expense ratio is 0.88%. Next we have ICICI Prudential Blue Chip Fund. This is also a equity fund. The 3-year return of this fund is 24.32% and the 5-year return is 14.79%. The expense ratio of this fund is 1.03%. Next we have SBI Blue Chip Fund. It is an equity fund. The 3-year return of this fund is 24.46% and the 5-year return is 14.45%. The expense ratio of this fund is 0.87%. Let's move on to ICICI Prudential Corporate Bond Fund. It is a debt fund. The 3-year return of this fund is 5.57% and the 5-year return is 7.64%. The expense ratio of this fund is 0.32%. Next we have ICICI Prudential Short Term Fund. It is a debt fund. The 3-year return of this scheme is 6.09% whereas the 5-year return is 8.06%. The expense ratio of this fund is 0.40%. Next we have Aditya Birla Sun Life Corporate Bond Fund. This is also a debt fund. The 3-year return of this fund is 5.38% and the 5-year return is 7.72%. The expense ratio of this fund is 0.31%. Next we have HDFC Balanced Advantage Fund. It is a hybrid fund. The 3-year return of this fund is 27.23% and in 5 years it gave 15.89%. The expense ratio of this fund is 0.85%. Next on the list is ICICI Prudential Balanced Advantage Fund. This is also a hybrid fund. The 3-year return of this fund is 15.67% and the 5-year return is 11.65%, whereas the expense ratio is 0.91%. Let's move on to ICICI Prudential Equity and Debt Fund. As the name suggests, it is also a hybrid fund. The 3-year return of this fund is 28.66% and the 5-year return is 17.38%. The expense ratio of this fund is 1.13%. Next we have HDFC Gold Fund. This is a commodity fund. The 3-year return of this fund is 5.55% and the 5-year return is 13.78%. The expense ratio of this fund is 0.18%. From the list, we see that equity mutual funds have given some of the best returns in 3 years and 5 years period. And then comes the hybrid funds. This also gave good returns. And the bottom we have commodity and debt funds. Please note that equity and commodity funds are some of the riskiest categories, whereas the hybrid funds have mitigated risk. On the other hand, debt funds are some of the safest funds to invest in. So please choose your funds wisely. If you feel this information was helpful, then please leave a like. It means a lot. And for more similar videos, please subscribe to Your Schemes. Thank you. Have a good day. Bye-bye.